Okay, so while I was editing the video, I entered into a trade that I was not supposed to enter, first of all, because this is not my trading session, but just wanted to show you guys that if I want, I can make 250 US dollars. It went up to 350 right here, but I can make 250 US dollars or even $200 just like that when I'm making a video. Okay, if you want to learn these things, I entered here. Why I entered here? There is nothing right here, right? You cannot see anything, but you see market took some liquidity inside of a 15 minutes fair value gap, and that's a 15 minutes order blocks mean threshold. Market reacted to that and started coming down, gave a market structure shift, fair value gap, retraced, came below this. I had a line drawn over here and I had a line drawn over here. As you can see, market didn't go above that line yet, so I have $200 profit just by closing it here. I got $200 profit on my real account. As you can see, my TraderPath account is connected over here. So if I wanted to make $200-300, I can make something like this. Okay, market whatever it does, I don't need to look too much about this because there are, it was bullish. You can see, like on the lower chart, it was bullish. Now the candles are not impressive. Candles are not looking good because it's Asia runs. Mostly during the Asia runs, this is what happens with the ES. Yes, if I holded the trade, maybe I could reach to my liquidity levels. Yes, I just wanted to show you guys. That's why I entered into the trade. So if you want to learn something like this, you can learn by watching my videos. Thank you. Hey, what is up guys? Welcome back to ProTraderPath. I'm back with another video, and as promised, today I'm going to talk about the order block and the breaker block. But before going to this video, or the main part of the video, I hope you guys watched my previous video regarding all the gap theories and regarding the gap expectations, definitions, and how market reacts to a gap, or what we expect from a gap in terms of market reaction. Okay, so if you haven't watched that video, please go watch that one, because that will be very important in terms of understanding a order block or a breaker block. Okay, and also I'll put the link of original ICT explaining the order block in the description, so if you want, you can go and watch his video as well. However, I'm trying to make it as simplified as possible, as understandable as possible. If you're new, I hope my video will be good enough for you to understand the fact, but if not, you can go and watch original ICT explaining the order block. Okay, so without any further ado, let's start. Let's say here I have a sell side liquidity resting. Okay, since I'm talking about a order block that is supposed to be a bullish order block. Okay, so in this case, I have a support level in the form of sell side liquidity. Okay, so what is a bullish order block? We expect that price will come to that order block and respect it and give the move towards the upside. Okay, so when price is coming towards a support level, what we expect from a support level, that it gonna bounce. Remember what I talked on my previous video, that when you drop a tennis ball or cricket ball from your hand to the ground acts as the support level, and when the ball hits the ground, it bounces up towards your hand or even higher, considering how much force you are adding to that. Okay, so similarly here we have a sell side liquidity in the form of support level or some sort of fair value gaps or higher time frame point of interest that I talked about on my previous video. Price came to that level, then it starts to go up high. Now the moment the last down close candle from the opening to the closing, okay, we need to focus on the opening and closing. We don't bother about the wicks of a candle that much, because wicks shows mostly the weakness. Okay, that's why it says it's called wick. So what I focus here is on the body of the candle. When the next, or when there is a up close candle happens from a support level and it starts to go up higher, and closing above that level, this is a bullish order block that I'm talking about. So in this case, it's closing above that level. The nearest down close candle to a support level, or the last down close candle to a support level, is your bullish order block. So let's say there is this sell side liquidity resting here. Price came to that level, took that liquidity, and the next candle starts to go up high. So when this specific thing happens, the extreme down close candle, since there are 3 down close candles, we can consider all these 3 as the order block. Okay, this can be my entire order block range, but we mostly focus on the lowest down close candle, which is just this one. When price goes above that level, remember it's coming up from a support level in the form of sell side liquidity, or we can have fair value gaps over there. Okay, when this happens, we can consider this as our bullish order block. So this will be our order block, but it's a bullish order block. So what we expect from this is price will come, go a little lower inside of that order block, or just come on top of the order block, and then it starts to go up high or higher again. Okay, so this is what we expect from an order block. Now if this definition is not clear to you, I will go and show you to the real-time chart as well. And luckily I choose to like make this video on a very good day, because just last night I used some of those and I got real good profit last night. Okay, and all the charts are right in front of me. All I need to do is just scroll to the downside and I can show you guys the chart. Anyway, so when price is coming towards a support level or a previous sell side liquidity or a fair value gap, okay, a sell side liquidity is also a form of support level. Okay, what is support and resistance? If you don't know, let me tell you quickly. You will see the market moves something like this. Okay, it goes to a high, it comes down, it goes to a high, comes down, goes to a high, then comes down, then this sort of forms. Okay, every time there is a swing high, there will be a retracement, and like new swing high, new retracement, another swing high. From a certain level it gonna come lower for the downside. Market moves like this. So a support level is formed. This example will be a major support level. Major means, let's say that's the highest point that price went. Here is the nearest body of the candle. Price came to that level. This level here acted as a resistance, here acted as a support. When price came below it, it acted as a resistance one more time and then sent the price lower. So this is a major support and resistance level, but support level is just this far. Okay, let's say when price was going up, it created a fair value gap here. So price respected or reacted on the fair value gap, that creates a support level, goes up high. So here on this move, the last down close candle that was sitting on somewhere around this level, that is your possible order block. Now in this example I just draw straight to the downside, but there will be some other reactions as well until it reaches to the point it was supposed to reach. But just for the sake of the video, this is your support level, and when price is trading below that level, it becomes your resistance level. When price is trading above that level, it becomes your support level. So this is a major support and resistance level, and I will show you the example on the real-time chart as well. When price was trading towards a support level in the form of sell side liquidity or fair value gap, the last down close candle is your bullish order block. I will give you the example in a minute. And then you need to see some sort of reaction from that support level. This is the reaction that price don't want to go any lower than this. Now you can consider market is going towards the upside. This is your order block, and what we do is we mark the opening price as our order block level, because we expect price to respect the opening price of that candle. Now if you want to use your Fibonacci retracement tool, you can use that one, or you can use the gun box to draw the 50% level of that. We expect price to, let's say price did not respect here, price came little closer, okay, or little downwards like this. What we expect is price to respect this midpoint. From the opening to the closing, the 50% level is the midpoint level, okay. We expect price to respect that area, and that area becomes your mean threshold or MT, okay. We mark it like this as MT. If you see, I have a mean threshold drawn right here, okay. I'll just make it bigger so that you guys can understand. So this mean threshold is very important. If price violates that mean threshold and closes below that, then this might not be your high probability order block. This is still a order block, but it might not be your high probability order block. Why? Is because price may come and revisit the support level one more time, or the recent low one more time. So the recent low becomes here, price may create a candle like this, and on the next candle it may, okay, on the next candle it may come like this, and then it may give the reaction towards the upside. So then this will become your new order block. But don't get confused, I will give you the example, it will be clear, okay. Just for the sake of the video, remember that when price is coming towards a support level in the form of maybe sell side liquidity or fair value gap, it's a support level for the price. When price is coming there, grabbing that sell side liquidity or testing that support level, it starts to go up high, the last down close candle becomes your order block. What sort of order block? Since price is coming down and then going up, it becomes your bullish order block. You expect price to respect that area and never come below that order block, okay, or at least the mean threshold level. So it can come like this, the wicks can go like this, it's still respecting the mean threshold because price tried to go below that, and then it was pushed up higher and closed higher. So this is your respect of your mean threshold. What is the mean threshold? From the opening price to the closing price, the midpoint, the 50% level. So if you have a gun box, you can go there and I will show you the settings that I'm having. So I just had the right levels on 1, 0 and 0.5. Now I can add these for the added confirmations, because sometimes these are the levels that price respects and reacts from, and that gives us even more confidence that this order block gonna work even better. But the midpoint is very important for any sort of things, for a fair value gap, for order block, for breaker block, anything that you are talking about, the midpoint is very important. For the fair value gap, the midpoint is called consequent encouragement, which is CE in short. So this is my gun box settings. If you don't want to use the gun box, you can go to your fib retracement, and then you can go to the settings of that fib retracement tool. You can use the 0.5, 0, 1. Now I have it in a different position than the usual, but it doesn't matter wherever you put it. You can just select on box, you can write like 0.25, that's your, okay, I need to put a 0.25, and you can select another one, you can write 0.75. so this gonna give you the 25 and 75 level. So you can see like that's 0.25, 0.5, 0.75, 1. So from 0 to 1 you can divide it like this. Now if you don't need this, you can just tick it off and then click OK, you will get this. Okay, so what I want you to do is you go, let me show you from where you can get your fib retracement. This is your fib retracement. Okay, from this area you can get your fib retracement. Select that fib retracement, draw whatever the default settings is, just draw your fib retracement, double click on the fib retracement line, and then select extend it to the right side. It will help you to understand the price over there, and also if you put your price line ticked, it will show you the exact price the midpoints are, so that you can even have more precisions regarding that. And if you want, I don't like the background, that's why I kept the background like this, but if you want you can like use the background. Okay, and you can use different color for the 0 and 0.5, it will give you different, that's the 0.5 line. And let me put so 1, let me put similar color towards the 1 and maybe a different color towards the 0. So now this way you can have different colors. Okay, if you choose different colors between your fib retracement, it will give you some background, and depending on how you put your opacity, it will give you the opacity there. Okay, although I don't need the background, it's okay to have like this. So what you want to do is you go to your fib retracement, go to the settings, put extend to the right so that you don't need to drag it from one place to another, just to know what the price are. Background, up to you, you can have the background, you can turn off the background. Just select any of these. Okay, select any of these and put 0.25, 0.75, maybe a 0, a 1, a 0.5, just the way I have here, like 1, 0 and 0.5. I don't need the 25 and 75, but I kept it here so that in future if I need, I can just come and tick it to see like where price is reacting from and what is the actual price on that level, just because of that. And then once you're done with your fib retracement settings the way you want to make it look like, go to template, go to save as, or you can write whatever you want to, like measure levels or something. You save it. Once it's saved, let's say I have other settings as well for the fib. You see this, my fib is different now. Okay, so when I draw a fib, all I need to do is select this template or double click on the fib, go to the template, save the measure levels. Okay, I have another measure level anyway. You see, it changed just like that. So you don't need to worry too much about it. If you have saved this, you don't need to worry about the gun box or anything. When there is a downwards move towards a support level or a sell side liquidity or a fair value gap, or a bullish fair value gap I should say, or maybe bullish inversion fair value gap, the last down close candle is your order block. So for a bearish order block, it's the exact opposite of the bullish order block. What happened is, let's say there is a buy side liquidity or in a form of resistance level. Remember what a bearish fair value gap does. A bearish fair value should act as a resistance. If you have watched my previous video, you will know what it gonna do. It gonna act as your roof above your head, right? So when you throw a ball towards the upside, it gonna hit the roof and then it gonna fall again towards your hand or towards the ground. So this is, let's say there is a fair value gap. Okay, don't get confused. And also near that fair value gap, there will be some sort of liquidity or resistance level that you can find. Now when price is going towards a resistance level and it's coming down from that resistance level, the last up close candle is your bearish order block. So the green candle, okay, the green candle will become your bearish order block. The price gonna go away from that level, come and retest that level, respect we want to see. Remember, we want to see the respect of the mean threshold. If it doesn't go to that level, it's even better. Okay, let's say price didn't go to the mean threshold, we expect price to give some sort of reaction from this order block. Usually how we enter into a trade with the order block, usually we don't enter on the like immediate order block. You can, I'm not saying you cannot, but I personally don't just use the immediate order block. I want to see some sort of market structure. If there is no fair value gap, then I want to see that and then I want to enter that. But if let's say this fair value gap was not retested and price is still continuing to go lower, in that case I would like to, you know, like add some confluence with a new order block or breaker block, things like that. Breaker block is coming right after this one, but just stay with me. So a stop loss can be the order block's high, or I would suggest like a stop loss can be the order block's high and take profit will be the recent swing low that price is coming from. Okay, like this move, let's say it is coming from somewhere around this level, or if you can find some relative equal highs or lows, like relative equal lows here, you can go for that. Okay, this will be your take profit, or maybe this will be your take profit. So a stop loss can be in two different form. Number one, you can put the stop loss on that high of the order block and then target whatever the recent swing point is or wherever the relative equal lows are. This can be your stop loss. Or since you want price to respect the mean threshold, this can be your stop loss, little above the mean threshold. Or if you draw the 75% level, put around that 75% level, because sometimes the wick can go like this and then it can continue. So if you don't want to get stopped out, you need to put it right little above there. Anyway, you can put like this. This is more conservative stop loss that will give you higher risk to reward. If you really want to know about the risk to reward, that will give you higher risk to reward having the same entry level. But if you put here, that will give you more area to breathe. Let's say price is trending here and then coming down, it won't come straight away every time. So there will be some sort of drawdown that you will see and then it will come down. But what I'm saying here is a stop loss is really important. Don't try to be too greedy and put your stop loss right here on the mean threshold, expecting price on tap that, or here. Yes, you can put little above the mean threshold, but that's, as I'm saying, a more riskier approach. The more better approach is at least going for the order blocks high, I mean the closing price. Okay, this is the closing price, at least go for that. If there is a huge wick over there like this, then price sometimes tends to go for this 50% level. Okay, like with the wick, not with the body. Remember, body cannot close this, so you can go, instead of going all the way above there, you can go like the 50% level over here. This is, I'm showing you guys the way I use it. Okay, the way I'm getting success from. I'm not trying to, you know, make it a huge risk to reward by putting very aggressive stop loss like this. It can give me 4.11 with the same entry, same take profit, but instead of that I'm more than happy to take 2.3 on, or even lower than that, if it, like, depending on where the order block is forming. At least this high, that also can be considerable. The, you know what I mean, okay? You need to back test, you need to fraud test, you need to do some paper trading before you go into the live trading. Okay, so this is your bearish order block that we expect price to respect and then start to go lower. So this is your bullish order block coming from a sell side liquidity in the form of support level. You will see there is a bullish order block, there is a bearish order block. You can get confused, right? Because you will find both of them in everywhere on the chart. Now let's go to the live chart, real-time chart, and let me give you guys some example. So this is, I marked this one as my bearish order block. Okay, I hope you can see my marks and stuff. Let me make it little bigger. Okay, so this is your bearish order block. Why this is your bearish order block? As you can see, there is a huge gap over there. Let me just mark the gap. I will put it as opening gap just for the time being. Here, actually this much, there is a gap, right? Every gap acts as a, this sort of gap is also a fair value gap, right? Because it's not fair for the people who are waiting to, you know, waiting to enter into a trade around this area. Price never, from this close, price opened here, there is a gap. So what I'm saying here is this gap should act as a resistance because it's a bearish gap, right? So it should act as a resistance, price should go down. On the gap, here is a level that price respected. Okay, if you look on the left of that, acted as a support here. The same level, if you look on the left, acted as a support before this gap happened. So let's focus on this area, that's a support level, or in this case it's a resistance level because I'm talking about bearish order block. So that's a resistance level. Price took that liquidity, let me mark like this. So that buy side liquidity was grabbed by the price, and immediately the next candle started going lower like this. Now on my trade execution videos I have shown these sort of things, but since today I'm talking about the order block, I will show you again what that is. You see, price came here inside of that order. This is why I said, like, I don't want to be too conservative and put my stop loss on exact mean threshold. That's the 50%. Price respected the 50% because no candle's body closed above that level, but the wick went up to this level. So if you were targeting to enter into a short from this order block, you got stopped out. That's why I'm saying at least put your stop loss around this level, okay, or at the high of the order block. For more safer approach, high of the order block is what we expect will not be violated with any sort of candle forms. What I'm saying is, with the wick, this wick should not go above that highest point. Although the mean threshold, we are talking about the opening and closing price of the order block and the 50% level, but I don't expect, or we as a trader don't expect price to violate this for making this a valid high probability order block. Now why this order block is high probability? First of all, let's talk about where it is coming from. If you look on the left, it is coming from a opening gap. A gap is a very important part, okay? That's the only candle's high that I can see before that gap happened. Price went above that high by a little, but closed right below that gap. Number one. Number two is, you see the order block's body. Now look at the next candle, how aggressive that downwards move was. How aggressive was that move? It was very aggressive, right? Just look on your left. It's very choppy. It's mostly consolidating. So what we expect from market is a consolidation, then a manipulation, then a distribution. So power of 3 works like that. I will explain those in my strategy videos or other stuff, but just for the sake of this part, the next candle, remember from my drawing what I expect. It's from a support level. The next candle is going above that order block's opening price. In this case, it's a green candle. Since it's a bearish order block, where is my opening price? The opening price is on the lower part here. Okay, so it went straight through that level. Even the lowest point, price closed below that. That's a very high probability, because first thing first, it's coming from the gap. It took some sort of liquidity or violated a high on the left, then it's coming down. Okay, also the same order block has a fair value gap right here. Now I have this template saved over here. I hope you guys can see this. It's called order block plus fair value. You see the order block I wrote on the first and then the fair value. Why? If I draw it like this and remove this one, specific that part, you see this one, it is my order block plus fair value. So order block is the higher part, fair value is the lower part. That's why I put the order block first and then fair value. Okay, now since the same order block created a displacement like that, this is a high probability order block. So you can wait for market to reach that level, which is sometimes not a good idea. That's my order block level. Okay, you can wait for market to go to that level. As I'm saying, sometimes it's not a good idea. Why it's not a good idea is because since there is a fair value gap here, it's mostly mostly price can react from there. You don't know if price will go up to that far or not. So in this case, you can consider, taking your entry from the 50% level or even lower of the fair value gap, whatever, but your stop loss needs to happen over there. Okay, or at least on this candle's high, because we don't expect price to violate that high, that swing high. But since I'm talking about order block, let's see, did any price closed above that order block line, the order block's body? No. So that confirms that no candle closed in my order block's mean threshold, right? The 50% of the opening and closing price, nothing went there. Remember, this green candle I'm talking about is my bearish order block. This price respected that. Okay, price came here, respected that, and what happened? It started going lower. Now this is my new resistance level. Remember what we expect from this, that price gonna respect this order block and it should go down. So this became my new resistance level, from where this resistance level happened when price went down, came above, retested that liquidity or retested that order block, took the recent swing lows right here, and now it's coming up. Now since the order flow is bearish for long time, you see market is going down, and this is 15-minute chart, so it's been for last couple of days market is going down. Okay, so this order block we don't expect to, like this one, act as a bullish order block, or this one act as a bullish order block, okay, until it reaches to the liquidity. Now since this is my new order block and resistance level that I'm expecting price to respect and go lower, which price did. This green candle is coming down from that. Also it's coming down from a fair value gap. Okay, I have another fair value here. It's balance price range. If you have talked about, if you have watched my previous video, you will know that the common area, I said the common area. Okay, so this will be my common area between these two fair value gaps, and that's where price again came and respected. Okay, so price went up to retest that area, came down, you see this. But forget about the balance price range, talk about the order block. You see there is this order block now happened. What I said on my drawing, price can come a little inside, but I don't want to see the mean threshold is getting violated. Price went little inside with this green candle. The wick can go wherever it wants to go, but it cannot go above this this swing high that price recently created to continue its move lower. And then what happened? Price went there, price respected that area, started going lower. Now currently price is at this level and it's a new day opening. There is a gap also here. I don't anticipate anything in the market. Okay, and I have nothing right here. Okay, I cannot see anything. So since I have nothing that I can clearly see on my left, I don't want to, you know, hold a trade for longer time. So now that there is this new swing lows over here and here, which we can consider relative equal lows, considering what market does, I can expect that this sort of liquidity will be taken later on. But since there are some other relative equal lows and it already delivered what it was supposed to deliver, remember these equal lows that the first delivery should do, that's what price did. You see, like retested order block, came with this candles wick, it actually took the liquidity from the recent lows. Let me mark it. It went right there, it went below, and immediately it tried to go up, then it started going down. Anyway, now that I think clears the order block concept. So this is your order block. If you miss this one, since it's coming from a order block that acted as a resistance level or new resistance level, this becomes your new order block. Okay, if I put the order block plus fair value like this, now you will see the proper respect. Okay, so this is a high probability. So what I expect to do is, let's say I took entry on the order block, and what I don't want to see, it's violating this or at least this. What I target usually is 1 to 2, but let's target the level that price went. Okay, let's target, just for the video, let's target that and let's put it here. It still gave me 2.4. now my 1 to 2 done. In this term, price didn't take the liquidity. You see, it didn't take the liquidity. Why? Is because this move already took the liquidity from the left, and price is going up from a what? From a major support level, because it already took the liquidity lower, maybe on the higher time frame, I'm not sure. As you can see, yes, so here the original liquidity was sitting here, price took that liquidity. Okay, and then if you see on the daily chart, you have a fair value gap right here, you have a fair value here, maybe not this one price tapped, but it's good to have that one, but there is a fair value also, and price took that liquidity and now it's coming up from there. Okay, I hope you can see this. Let me just remove this one and let me put fair value only. Okay, so this is a major support level. Why? Because it's a bullish fair value gap. That support level had these swing lows as liquidity, price took that liquidity, now it's retracing. I'm not saying that price is going upwards or price should go up straight away from here, but it took some sort of liquidity from a major level and a higher time frame point of interest, so it can go and retest the opening gap that I marked right here. Okay, the opening gap, so price can go there, or it created a huge fair value gap right there. Okay, with this kind of order block, I'll talk about that later, but this is also a order block, the name is different anyway. So since price is doing that, as you can see, that's my daily fair value. Oh my god, how far I have drawn this. That's my daily fair value. Okay, and that was my original liquidity level, so sell side liquidity. So price took that liquidity, now it's trying to go up high. What happened around this area? What did I say about the order block? Remember, the bullish order block is your last down close candle. That's your last down close candle. Let me delete everything. So why I'm not considering this one? I can consider that as well, but where is the reaction that I first saw from this liquidity or this support level? Price came below that, yeah, and then this candle went impulsively. I can consider this as well, don't get me wrong, but at the moment I'm looking mostly here because that's my green candle that I got straight away. Did price respected that? Yes, it respected that. Now there is this thing that I talked inside of my order execution video, that when I don't find the swing low with my order block, okay, what happened here? The high was with my order block, price went towards the upper side, came down. The high was with my order block, price went around the min threshold, came down. In this case, where is my swing low? With the green candle, right? This one. So for my order block, it's, don't think like the only opening and closing is your order block. Order block is the high to low. Okay, order block is like this, but since the low is not with my order block, I want to add that lowest level with that order block. Okay, and in this case I don't need the high, I just want to see the opening and the lowest point that price went. Now just look where the price came. After going above, it came on that level. And if you want to know why, you see this, let me mark this, you see the 0.5, this is also a form of fair value gap inside of a lower time frame. This is 15 minutes. Let's just have a look on the 5 minutes if I can find any fair value or not. No, I don't have a fair value there. Let's go to 1 minute. I think I will find some sort of fair value. Now just look where your order block is. Where is your order block? You see, why I take that lowest point is because of this. What in 15 minutes looks like a week, okay, in 1 minute that looks just like this. Remember this box that I have drawn on 15 minutes, this box, and now that became my order block. You see the order block, and look where price came, exactly on that 50% level. And also if you want to look on the left side here, inside of that area, what I said, there will be some sort of fair value. Can you find the fair value? Here is your fair value. Did price respected the fair value? Yes. Anything, anybody didn't close below that fair value. Now I am using only the pro version of TradingView. Okay, I don't need the higher subscription tiers. But if I had the higher subscription tiers, because I don't trade below 1 minute, okay, I don't want to go in seconds. So if I had that, I could go to the seconds, adding the what it calls, the second option will appear here, and I could go like here. You can see the 30 seconds, 15 seconds. I cannot go there because the only membership I have is essential, my current plan. I don't need the plus, platinum, you know, like these elite, expert. I don't need all these. Okay, for the moment being I'm not using those things. I don't even need the essential plan, to be honest, because since I trade with live account, my broker provides me all the data. All I do is I use trading view. Okay, but I still kept the essential plan so that I can show you guys the reply modes and other stuff, like this reply mode. Okay, this sort of thing. And remember what I draw up there. Here is your opening gap that I was talking about. Here is the liquidity. Here is your support, here is your resistance level, and as you can see, that becomes your order block, and that's your price delivery over there. It never went above that order block, came lower, took the liquidity, and since the relative equal lows are sitting somewhere here, yep, so that's your relative equal low on the 15 minutes. Price delivered towards that. Now in between a lot of things happened, because usually we want to take our profit on this swing low, or you can understand, right? Because you see there is my order block. If you enter on the order block from here, let's see how far it went. That's my stop loss. Let me bring it here so that you can see the drawdown and the stop loss as well. That's my stop loss, and that's my take profit on this swing low. So that's 3.46. okay, that's straight away 3.46. now I don't really need anything more than that, and I don't need to go to this far. But since the analysis was on 15 minutes, these relative equal lows were not looking too bad over there. And let's say like you had it until these relative equal lows, like until these points. Now if this is your thing, you need to see some sort of, you know, upward movements. Now if you don't want to take your take profit around these lows and you want to target the entire low, then you have to wait and see this sort of drawdowns as well. Okay, but just by targeting these relative equal lows over here, you could get 7.77 or keeping the same entry, same stop loss. Okay, anyway, I'm not here to give you guys some anti pattern straight away. Just focus on the order block and what I talked about, the week on 15 minutes, that looks like this. Okay, this is your order block, that's your fair value gap that it created, price reacted. Now let me talk about a little bit of entry pattern. So remember, this is my sell side liquidity from daily chart, and I'm now in a 1 minute chart. So you know how many 1 minute candles are there for a daily candle. Okay, you see all this, don't need to look that far, to be honest. Just look here, price took this liquidity here, which is also below that daily liquidity level, gave a market structure shift here on the lower time frame, created a fair value gap here, bring it here. So we want to see something like this, price taking a major liquidity inside of a daily fair value. Remember, I just removed that fair value to make the chart clear. So inside of a daily fair value gap, which is a huge confluence, it gave a market structure shift, retested that fair value gap, entry here, stop loss for a conservative entry, it will look something like for an aggressive entry, it will look something like this, targeting this recent equal highs like this. You can get 1.5, or you can go for these swing highs like relative equal. You need to look for some sort of relative equal highs. Okay, just single high or single low is not good enough. I mean, don't get me wrong, you can still get some sort of profit. So that could have given you 5 hour. Now if you don't want to be this conservative, because that's also like, where is this stop loss? If you look on the left and your order block, okay, that's my major level. Let me just change it to the mean threshold on. Okay, if you look on the left, you see that 0.5 line, the middle line, it came below that. Okay, that's why I'm saying here, if the stop loss wasn't below the mean threshold and the mean threshold was around this level, I would simply put below this swing low, I mean this low of this candle's low, because that's my fair value gap candle's low. So this is more than enough, and that would have given me nearly 4 hour just by targeting this, and price is currently trading here. So I hope you got the point of the order block. When there is like the lowest point or the highest point is not with the order block, I try to add that part as well. This is my personal observation. Okay, don't get me wrong, this is my personal observation and it pays me off beautifully. As you can see, like, I'm just giving you the live example that I didn't even look before. Okay, I started drawing my candle on the 15 minutes chart. I showed you the bearish order block here, and then another example of the order block, and when price came here and started going up, I went to first 5 minutes, then 1 minute, just to show you guys what happens on the wicks. Okay, now in 1 minute, if you see wicks like that, you can, okay, let me just change the name so that you guys don't get confused. Okay, so in 1 minute, when you see a wick like this, or maybe a wick, let's say this black candle's wick was higher like this, you can drop down to 30-second or 15-second charts if you have those, and you will find your better order block and better trade setup over there. So I don't trade on 15 minutes often, like I sometimes trade, but not every time. However, I mark everything on the 15 minutes and then I try to trade on 1 minute. Okay, so if I had marked my 15 minutes area, let's say my 15 minutes high, since there is nothing around this area, I'm just considering this as my high. This can be a high, but that's a swing high. Anyway, this is my high inside of a gap, opening gap. Price came, violated that, started displacing aggressively. This is called displacement. Why displace? Because that was the closing price. Next candle opened and started, like, you know, like moving away. What is displacement, right? When we say like shoulder displacement or bone displacement or joint displacement, what is that? Our bone moves away from its original position. Okay, so it just moved away from that level. That is why it's a huge displacement, and that one candle created fair value as well. Okay, I mean, one candle means the huge displacement. You see the wick was very long here, but still there is a fair value gap. So this one is my high probability order block. Okay, if I entered inside of my fair value, let's say I didn't enter on the order block, I entered on the fair value, and there is a small little volume imbalance, so I would at least put my entry on that volume imbalance, and my minimum stop loss had to be here. That's my minimum stop loss level. Why? Because that's my fair value gap candle, and that also covers my order block open and close price and that week, partial of that week. Okay, part of that week. So that would have been my minimum entry and stop loss, and let's see if it has given me the 1 to 2 or not. Did it give me the 1 to 2? Yes, because that's what I target. Okay, I don't just target the liquidity. Yes, what I do is, if I see my liquidity is providing me 1 to 2 like this, I would go for that. Or what I do is, when this level price, when closed below this level or took the liquidity, I might close some of my partial positions, some of the positions on that level, so that I can simply have the profit and then let the other area to go for my 1 to 2. Okay, usually 1 to 2 is, for my observation, this gives me more than enough that I need. Like if I risk 1%, that is 2% of my account growth. And as you can see, like if I had a $50,000 account, I'm risking $500 for this stop loss and I'm getting $1,000. So from one trade, if I can earn $1,000, I don't really need to go any further. Okay, and 1 to 2 is mostly, I like, if the analysis is correct, if everything is correct, mostly 1 to 2 is what I can get every time. Like every time, if I'm not wrong on my analysis, let's say like this price went above this swing high. What that means price, I thought this is a support level or resistance level, and this gap is important to the price wanted to go and retest the high of the gap, or maybe price wanted to go above the gap and grab the liquidities. Okay, so if I'm wrong, why I'm saying this is, I always try to go with the flow. Okay, trend is your friend. Remember, when you are trading or when you are even back testing, trend is your friend. Don't listen to any person, any other person. If you want to learn ICT himself told about this thing, like where towards the order flow your focus will be. No matter how good of a long run or how good of a buy setup you can get, your focus should be mostly towards the order flow. Now for this period of time, price took the liquidity, gave a market structure shift, little bit of fair value gap with this order block. I hope you can see this. Okay, I'm just saying too fast because I don't want to make the video too long. So that's a liquidity grab, that's your market structure shift. As you can see, there is a small little fair value gap that price tested, or you can go like this with order block. So fair value plus order block, entry on there, and where is your take profit? Maybe around these swing levels. Okay, these swing levels, or since there is a fair value gap that price is coming down from, you see this, I hope you can see this, you can target the low of the fair value. That will also cover the order block of that area, the bearish order block. So two possible things. If it doesn't give me 1 to 2 risk to reward, I will try to go until this far. Okay, not even for the swing high. Not because I'm looking at this, as I'm saying over and over again, where will be my stop loss? It's a huge candle. If I put my stop loss here, how much can it give me? This is my swing high. How much it gave me? 1:1. Now if I go like this, it gives me only 1.75. Can I do anything about this? Yes, it's a huge order block, and I don't expect price to go this low after a huge displacement like this. Okay, maybe there is some news event or whatever, I don't know, but where can I put it? I can put something around this level. Now did it give me the 2.3 1 to 2? Yes, it gave me the 1 to 2. So I don't really need to go for that fair value gap. If I'm putting like this, if I'm going for the fair value gap here, this is why a little bit of analysis is needed, because I analyzed that price took some liquidity, gave a market structure shift, fair value gap, price retested that. I hope you can see this because I'm just moving my mouse pointer. You see this liquidity, this market structure, fair value, took that, like retested that fair value, came lower and lower until, I hope you have some sort of idea about where it came on that specific level. So I was talking about, I think this, yeah, I think this is my 15 minutes fair value that I was talking about, if I am not wrong. So my initial liquidity was right around this level, which is, sorry, anyway, just let me keep it like that. Okay, and let me go to the 15 minutes that I was talking. Where was it? Yeah, this is the level that I marked from, from the daily chart. Now what happened here? Price took the liquidity. It's already coming down for a long time. Okay, so I'm with the trend, I'm not against the trend. Took the liquidity, gave a market structure shift. Now here is the fair value that price retested. Now should I go for this, like this one, or should I go for this one? Okay, let me put another mark here. Should I go for that or should I go for this? Why I'm saying this is because I will explain the buy entry here as well right now. So fair value gap, that's the candle that I want to put my stop loss, but since it doesn't cover the order block, I would go for this level. Usually this is good enough, but I'm going for this. Okay, that will cover the 50% of my order block. It already gave me on to 2.5. what I target 1 to 2. Let's see this liquidity can give me that or not. It gives me still more than that, so I can go for this or I can go for the swing. Okay, then I have to see something like this. But if I go 1 to 2, was it too hard? It just gave me here. Okay, I don't even need to wait for all these price actions. Just here I got my 1 to 2. That's why I'm saying I mostly target 1 to 2. And remember, I could have put my stop loss here, but since the order block is higher than that and I just explained regarding that thing, I wanted to put it somewhat around this level, like this candle's opening, and that covers my order block's mean threshold. Now that's my 1 to 2, even more. But anyway, I don't care about the 0 point something something. That's one entry. Okay, I didn't even target the liquidity, and by not targeting that and having here, I didn't need to wait all this time. Remember, it's a 15 minutes candle and I'm showing you in a 15 minutes candle. So there is a, this is 4:45. okay, 4:45 p.m. So New York session finished when this candle closed. This candle opened at 4:45, session finished. Now this is 6. This candle opened at 6, ended at 6:15, then this happened. So there is a 1 hour gap between that. So from my take profit, which happened, oh shit, okay, so from my take profit which happened on this green candle, I have to wait, I don't know like exactly at what moment this happened. Let's say it happened at the end, like nearly the end of that. Usually it happened at the very beginning, since it's a green candle. So price closed towards the upside at the last moment, so it happened around the first half of that 15 minutes. But I'm ignoring that. 15, that's 30 minutes now. Okay, I don't even need to count like this. Let me just put the measuring tool and let me wait for, let me go for the first one first. So that's 2 days and 11 hours. By targeting the liquidity, I need to wait 2 days and 11 hours. And how much can it give me? It can give me only 0.15. remember what I had over there, I had 2.03 and it gave me only 0.15 hour. For 0.15 hour I had to wait another 2 days and 15 minutes or something, what I just looked. So 2 days and 11 hours. Okay, 2 days 11 hours just for that 0.15. do I want that? No. That's why I'm saying like my 0.5 2.0 is the best target that I can ever ask for. Now if I went for this one, it could have given me 2.59. so if I reduce that 0.3, or let's say it's just 0.6, okay, I already have 1 to 2 risk to reward profit in my pocket if I targeted my 1 to 2. Now for just for the 0.6 or 0.59, I need to wait how long? Let me show you. Remember, this is the candle that gave me, this is the candle that gave me that liquidity, okay. For 0.6 I need to wait 2 days, 12 hours and 30 minutes. Now you think that 0.6 worth your 2 days, 12 hours or not? Okay, 12 hours and 30 minutes by targeting. Yes, you are trading on a 15 minutes candle, so it will be a long time or a long duration in term like comparing to a 1 minute or anything, but the higher time frame you trade, the better accuracy you get. Okay, don't get me wrong, but that's how the market, the higher time frame is more, you know, clean. The market structures, everything are more clean than the lower time frame. The lower you go, it's more choppy, there will be lots of choppiness. So you see all these things, just remember this area, why I'm saying this. It's a 15 minutes candle, you see all these wicks and stuff. Let me go to a hourly time frame and let me find that entry point where I entered. Okay, where I was looking for the entry. Okay, here, now look, it's just 3 candle that gave me the profit. Okay, 1 to 2, remember what happened, 3 hours it gave me the profit, and there is your only fair value gap. You see the fair value gap here to here, that's your only fair value gap. What I'm saying here is the accuracy. You see, even with this week, price didn't go above that order block, that hourly order block, even with this week, and it continued to go lower. This is why I'm saying the higher you go, it's better for you. So when in doubt, zoom out. That part is because of this. Okay, the higher time frame, yes, it gonna take more time to execute a trade, it gonna take more time to exit from a trade, but it will give you even better opportunities. Okay, anyway, that's the video coming very soon after this one. So I hope you understand the order block part. Now let's talk about a breaker block. What is a breaker block? Since I cannot show it with this sort of drawing, I'm gonna give you the breaker block in a different manner. I hope you can see this. So order block is the last down close candle that is coming towards a support level or a major liquidity level or a fair value gap. Like everything is a support level for your price. A major liquidity, a fair value gap, any sort of gap, these are your support level. Now what happened right around this area? Price created a low, this is a low, price created a high here, and price created a lower low. So price created a low on the left, price created a high, price created a lower low, and then price started going up high above this specific level. So what happened here in our term is, this is a liquidity grab and this is a market structure shift. If you have seen my market structure video, I think that's lesson 3, you should know what I'm trying to say here. Price from a higher point coming to a low, then a lower high because it's lower than that original high. Okay, lower high, now it created a lower low because it's lower than the previous low, now another lower high because that's lower than the previous high, a lower low, like this towards a support level or a major liquidity level. Let's say there is other liquidity on the left that price took on its way down. Now at this stage price took this liquidity. If you don't understand the liquidity, let me know in the comment box, that explain more about liquidity, talk about the liquidity more. Maybe in next video I'm gonna do that anyway, but still you let me know so that I can keep that in mind and I can make further videos. Price took that liquidity, then started going up and above this recent swing high. Okay, it went up there. This is considered our market structure shift. Why? Because this is a fast break of a structure that happened inside of that area. Why break of a structure? Market, what was the market structure before this move? It was creating a low, a lower high, a lower low, lower high, lower low, lower high, lower low, right? But with this move, it straight away created a higher high than this one. So this broke the structure right here, and this indicates that okay, market had enough of the down moves, now it wants to go for a higher move or something. Okay, so what happens here is, when the fast break of a structure happens, that's what we call market structure shift. So our market structure shift happened here, and then you will see there will be a green candle like this with some sort of wicks and other thing. The swing high, the highest body with the green candle, or the highest up close. Okay, this is where green candle closes, the upper line, right, upper portion of the body. So the highest up close of your green candle, this candle is your breaker block. Okay, now there can be multiple green candles here, so the entire portion will be your breaker block, but you want to look on the extreme one, like the order block. There will be multiple red candles, or in my term black candles, but I'm looking only the last one. Same thing here, the last up close candle that has the highest body. Okay, the highest body, not the wick but the body. Maybe the previous candle that I have here, maybe this one can have a huge wick like this. Okay, instead of that one, I'm looking at this specific candle, this one, the highest body up close candle. Just to make it less confusing, I'm gonna delete the previous one as well, but anyway, so this one becomes your breaker block. Now what you want to do is, you want to, usually what I said about the order block, you want to mark the open and close. Same thing here, you want to mark the open and close, but I just want to mark with a line. This level is what you will see price sometimes reacting from, and the high probability breaker block happens when around the same breaker block area you will see a fair value gap. Okay, so this is your high probability breaker block because it created a fair value gap on the same level on its way up. Let's say I missed this entry, I will have a similar thing happening around this area, but what happened here is market gave me a second break of a structure, or in this term just a break of structure, because that's my market structure shift, and this is my break of structure. Market gave me the break of structure, and then it created a higher low than the previous low and a new higher high. So if there is a fair value gap in this level, I can enter into that, and this one has even tighter stop loss, because mostly on the second break of structure the entry region doesn't get violated. Okay, so let's say this is my fair value gap and the candle's closing is right around this level. That will be my stop loss targeting the recent swing high. This gives huge risk to reward ratio. Like these small fair value gaps and these small stop loss, this can give even better ratio if you wait for that second break of structure, but that won't happen every time. Like the second break of a structure model, sometimes price goes crazy like that and you won't get a clear setup like this. But whenever you get like this, don't hesitate to take, because I have backtested this model for a long time and I yet have to see a loss. Okay, don't get me wrong, maybe I'll see a loss with this second break of a structure model, but so far I didn't. Okay, so far I didn't. So let's see what happens, but this is a very rare case unless you have multiple currency pairs that you are looking at, like the major one that has USD at the end, GBP I like this one for my own person, like from my own interest, but the ES and NQ. So how many I'm trading right now? ES NQ is the main thing that I'm trading. However, Euro USD, GBP USD, AUD USD and GBP AUD, these, and the like crypto that I kept here just to keep an eye like where it's going. Okay, don't get me wrong, I don't trade crypto anymore, but I just have this to see like how Bitcoin, because I had some, you know, some levels that I draw for my BTC reaction or something. Let me go to I think 4 hours or something to make it clear. Okay, so you see this Bitcoin, I had this weekly fair value gap drawn over there, and there is a huge candles wick that I was anticipating the 50% reaction, and that's the 50%. or the 0.5 level of that wick that I was talking about, and then price came there, closed, came there, closed, again retesting that. So let's see. You see this daily breaker block that I have wrote? You look this, let me go to the daily and let me show you, since I was talking about breaker block. Yeah, so there is a swing low, that's a swing high, that's a swing low. The highest up close candle that I was talking about, that is your highest up close candle, that becomes your bullish breaker block. Okay, so the bullish breaker block, you see price came here, went up, price came here, went even higher, took all these relative equals. Okay, that's where price is trading right now. So I'm glad I came to Bitcoin. Okay, I had these things drawn over there. Okay, I don't know why this line moved. So what I was talking about there is a swing high, market created a swing low, and there is your fair value. There is your fair value, if you can see it, if you can see your, oh shit, that's a daily chart. Okay, don't think like I'm trying to enter here. And what I said, if that is your reason, put the stop loss on the fair value gap candles low. Price respected, although you entered here, your profit you already got somewhat around this level, but let's say you didn't enter there, the same fair value got respected, or the test of the breaker block here happened, entry you can see for possible like buy side liquidity that price took from here. Okay, and also I think, yeah, price took the recent one from here, the relative one, and this one price took later because price created new relative equal highs over there, and then price took that liquidity. Anyway, I don't, as I'm saying, I'm not looking at crypto for the moment. I kept it here just to check where BTC is going. I have a portfolio, a small little portfolio. Okay, yeah, so I think you got the point of breaker block. So a low, a high, a lower low, then a market structure shift. The highest up close candle is your breaker block. You see, like daily BB I have written over there. Okay, breaker block written over there. But let me show you on the ES as well. Since I'm talking about breaker block, let me show you on ES. Okay, this is your highest up close candle, that becomes your breaker block. Okay, although I want to look for the body for entry purpose, but the entire candle is your breaker block. Price came to that breaker block, and what I said about the breaker block, if it creates a fair value gap around that area. So do we have a fair value gap in common around that area? Just look where the price came. Okay, breaker block, fair value gaps, common area, that's where price came. Okay, so entry, if you wanted, you could just enter from the common areas starting level like this. Okay, that's breaker. That's why this one, why not this one, or why not this one? Because this one had the highest up close body. This is the place where price had the highest level, highest close. Okay, yes, this candle can be your better breaker, but the swing high happened around like low, swing high, then lower low. This is not your swing high because it's equal at the same level. So low, swing high, lower low, that's why I'm looking around this area. That's my highest up close, the entire candle. So if you mark this one as your breaker, somewhat it can work, but this is where the swing high happened, so this is my breaker block. Okay, that's why things gets confused, and that's why I said the less you know, the better for you. So anyway, why the less you know the better? Let's say if you learned about the order block only, you could easily use your order block or your fair value gaps like that. Okay, now you know about the breaker block, you will look for entries over here, keeping some other things over here that price may come down to, and then you will get stopped out and you will say like this shit doesn't work anymore. Okay, that's why you need to back test, you need to forward test. Okay, not everything is not that easy. Okay, everything won't be easy like that. Now you have a high, you have a low, you have a higher high. here is your breaker block, bearish breaker block. Where? Here. Now price when came below that level, you want to see what happened there. Okay, this is why I'm saying, okay, did I have a did I get any market structure shift before this low? Since I'm talking about this high, this low and this high, is there any market structure shift until this candle happened? No. So where will be my, this is why you should mark everything. This is my liquidity grab, this is my market structure shift. Let's just, oh shit, let's just remove this one. So I gave you an example of bullish on the Bitcoin, and here as well the bullish breaker block, this one, and the bearish is the last or lowest down close candle. So that's your bearish breaker block. Market structure shift happened right here. Okay, that's my market structure shift happened. If I want to consider this as my breaker block, and that's my high, higher high, and that's the low. Okay, so I need to mark the highest and lowest level, and until price breaks below that with some displacement, I don't really want to consider anything market structure. Let's say I considered here is a market structure shift, then what happened? Price went above this swing high, this swing high, this swing high, this swing high, it went above, right? Yes, there are other things that I can add here, but I'm not trying to make things complicated. I'm here to make things easier. So that's your market structure shift, that's your highest, oh sorry, that's your lowest down close candle that has the lowest body. I marked the entire candle, price broke the structure here with a fair value gap. Okay, now why I said like the common area over and over again, I'm saying the common area. Okay, what happened here? The fair value started from here. You want to take entry here on a huge fair value like this, you don't even know if price gonna go to the 50% or not. But since I have this in common inside of the breaker block, I have this in common. Okay, now some people may consider this as a breaker block or this as a breaker block. Why? Because there is a swing high, but I'm calculating from here, that's why I'm still focusing on this one instead of this internal liquidity grabs and market structure shifts. Okay, I'm not focusing here, I'm focusing on this specific move. That's why I marked this one. Why I could mark this is because yes, it's a form of breaker block as well. As you can see, like price took all these liquidities even from this level, and the lowest level I can mark is here. Okay, so this is, it's the same candle that gave me the same sheet. Okay, now this is my lower candle, this can be my breaker, price stepped into that as well. Common areas, remember what I said, common area. Now look like that. Now liquidity, market structure shift, the down close candle, this is my breaker block, common area. Did it tap here? Now it gonna get confusing if you keep looking like that. Okay, just remember the high, low, higher, high, that's my market structure shift. Yes, with experience you can take entries around these levels. Okay, don't get me wrong, you can take entries around this level with experience, but that experience you need to gather from your back testing, your forward testing, you're looking at chart, you're reading the chart. Okay, everything requires time, everything requires patience, everything requires practice. So the more you practice, what happened? Price is coming down from a certain level. Okay, I don't want to go for this one more time, but there is this I have drawn. Okay, why? You go and you look. Okay, you go and you look into your ES chart, why I draw something like this here. Okay, that's your homework. You go and you draw something like this. Now price is coming down from that area, grabbed the liquidity, gave me some internal structural shift that I can consider with this swing low and this break. There is a fair value here as well, but why I'm looking here? Because there is also a fair value. Price came to that fair value, grabbed some liquidity on its way up, gave market structure shift on multiple levels with that one single candle, that's good enough for me. I can look for possible entries around this breaker block or this breaker block, but these are internal liquidity graphs. Okay, but the external or the main major liquidity happened around this high, this low, that high. That's the candle. Now this is a fair value, this is a breaker block for the internal, that's the candle. This is a breaker block for internal, everything was tapped. Okay, everything was tapped properly inside of that. Now since I said I mostly look around the bodies, that's my, you see like how beautifully it played out. Now if you want to look around this one as well, just look, the 50% level just aligns with the previous one as well, and price just went there and then started going lower. Okay, for the liquidity, and look how low it went from there. That is where I'm talking, and it started going crazy like this, and you see like I have this sell side liquidity. So from this level, where would be your stop loss? There is your fair value gap candle, and that's your breaker blocks high here. So you don't need to put your stop loss here, you can put just on the fair value gap candle. And targeting, I mean, I'm not gonna say this is your straight away target. Your target is this swing low, since that's the only thing you can see on the chart clearly visible, that's 3.72 already. However, if you want, you can look for the left and look for some other liquidities, but that's the only thing I can see by zooming out like this. I don't want to mark this one as my straight away one. If you are too confident, too greedy, you can go for more, but as I'm saying, that's the low that I can clearly see on my left. I'm gonna target that, and I'm gonna exit out of the trade with 3.72% gain on my account. Okay, so yeah, I hope the breaker block concept is clear to you. And see, like whatever example I gave you, wherever I showed you the breaker block, there is a fair value gap with that, and price, what I said about the fair value gap. With order block, if there is a fair value, that's a high probability. With breaker block, if there is a fair value aligning with that, that's a high probability. So not just because I'm seeing the market how it moved, or not just because what I'm saying, I showed you those things earlier, then I came to show you the example, right? I told you all that if there is a fair value with your order block, that's a high probability, or if there is a fair value with your breaker block, that's a high probability. And then I came to show you the examples, and these examples I'm just finding on my way. As you see, like I didn't have anything marked before, I didn't marked or looked into chart before. I just came, I just talked about these things, I just showed you about these things. Okay, if this is not what you want to know, you want to learn, I don't know, you can have your own opinion, you can have your own mindset, you can go wherever you want to go. Okay, I want to teach people what I learned, what I experienced, what I have looked into the chart for last 4 to 5 years of trading. Okay, I'm trying to, as you can see, for last few weeks or few days, I'm not uploading any trade execution videos, but don't think that I'm not trading at all. Okay, I'm trading, I'm making profit, but I stopped uploading the trade execution videos because I don't care about my views. And what happens is, most of my views are coming from that trade execution videos. And what is happening, some of the people that I personally know who are willing to learn these things, they are getting eager, they're fucking losing their mind after watching those videos. I'm sorry that I'm using this bad language, but I got so angry when I saw people are trying to, skip the parts, people are trying to learn everything in one day. I hate those people, and I told them personally that your trading future is going to be a massive failure if you continue like this. I told them on their face, because I don't care. I want people to learn properly. I want people to know what exactly they need to know. You don't need to know anything more, you don't need to know anything less. Okay, just know whatever I'm showing you guys, I'm trying to teach you guys, practice those. If you don't have these replay modes, okay, like this, if you don't have these replay modes, just practice on the chart. Okay, just mark whatever you have, mark on the chart, go to some available, like whatever data available on your chart. Since I have membership, I can go too far, like for at least few months of data I can get. Go somewhere, okay, look on the higher time frame, mark some areas over there, then come to a lower time frame, look how the price reaction happened around those areas. Now you see, like this, just let's talk about this area. Okay, let me just put a replay. I want to talk about this. Since I came here, let's talk about this area. On the 15 minutes, yes, it took some major liquidities from the left. Yeah, I cannot see any more high on my left. That's good enough for me. It took the major liquidity and it took some initial levels. Okay, these are 3 15-minute candles swing high. Why I trade 1 minute and how I trade 1 minute? Although there is news event, there might be a lot of things, because this sort of weeks and moves happens during news events only. Damn it, I had something in mind and now they won't allow me to look into 1 minute chart this far. Okay, so let me try to put the replay mode again and let me show you this area on a 5 minutes candle. Maybe that has something to show. Okay, 5 minutes. Let's see if I can go to 3 minutes. Yes, if I can go to 2 minutes. No, 3 minutes. 3 minutes is the lowest I can go, because it won't, the amount of data that it turns into, it won't give me that. So okay, price took some major liquidity and you can see there are some relative equal highs that it created on its way. It took that liquidity right with this candle. Then what happened? That is the low that price violated with this big move. Now what did I talk about? Two fair value gaps. What is this? This is your measuring gap. Remember, on the higher time frame what it looks like? It looks like your measuring gap. Do you not remember? Let's go from 3 to 5 minutes. Let's see how many fair values are there. How many are there? Only one. So that's your measuring gap. And where did I got this from? I got it from ICT. I had the link on the, like I had the part of the video inside of that as well. Okay, inside of my video, just for the proof. And I have this on here. I'm gonna put the link here about the order block, and then you will know why I'm saying what I'm saying. Okay, you will go and watch here. I'm not gonna show it anymore. I'm tired of doing this shit. I'm tired of proving that what I'm saying is not something that I made up. It's actually something that ICT said. Okay, I don't need to prove you guys anything. If you want to learn, you have to trust the process. If you don't trust me, how can you trust my lessons? As simple as that. Just, if you don't trust me, you can fuck off. I don't care about you. I care about those people who are trusting me, and I'm trying to deliver it to them. Anyway, equal highs, took it, market structure shift, two fair value gaps. Now what I said also about my trade entry, when I see something is happening like this, I try to go whatever is above 50%. This fair value gap is somewhat around the 50% level. Let's see what happened with the next candle. So that fair value gap may have been my entry. You see that? Let's go. This, now let me mark you your OTZ. So 62779, this is my OTZ. So that 62 and 71 has the thing here, fair value gap. Okay, where is my stop loss? The gap candles high. That's where I put my stop loss. Let's target the recent swing lows, that's 1.686. now let's go to 1:2, and on the left I can see some relative equal lows as well. Price may go to that level, but just for the sake of this part, let's see what happened here. Did I get my entry field, like take profit field 1 to 2? Yes, I could go even lower. Yes, I could target maybe the, let's see, like let's hope if I targeted this relative equal lows, okay, especially this one. So that would give me 0.78 more than what I got. Let's see if price actually did that or not. Did that? Yes. So why I took this entry? Did you get my point? Why I took this entry? Okay. Price on the left, I cannot see anything else but this swing high. Can I see anything on the left? Can I see anything? No. Only thing I can see is this swing high. Price took that liquidity, and after taking the liquidity, price created some relative equals, some consolidation. Just think about this as a consolidation. Price consolidated and then created some equal highs, generated more liquidities before going down. Okay, this is liquidity generation. Why? Every person who took their entry around this level for a short, okay, around this level, after seeing this liquidity grab and this sort of move, every person who tried to take their entry, what did I put my stop loss here, right? So what price needs to go, like where price needs to go to grab my stop loss or my money, the money that I'm willing to lose here? Where? Right about this level. It needs to go here, it can grab my stop loss. Price created that stop loss here. People who entered, let's say here, their stop loss is somewhat just little higher than this week. Who doesn't use this concept? I'm talking about them, okay? Every person who entered, everyone had their stop loss around these levels, okay, these levels, and maybe they targeted whatever they targeted. Price went above that equals, stopped them out, and immediately started falling. Now on its way, since it was during a news moment, there is huge week over here. I'm saying from this, but I can even show you, like Friday 1st September 8:30 a.m. So let me go to the news the calendar, Forex calendar, and I'll show you like if there was a news event or not. It's what was it? When was the time? Friday September 1. Okay, so September 1, October, September 1st, Friday. Let's apply Friday 8:30 USD. See the red folder news 8:30. I hope you can see that. If you cannot, let me zoom it more. Okay, Friday 1st September 8:30 a.m. USD news. You got my point, right? I don't even need to look into the calendar to know where the news happened. That's what I'm trying to teach you, okay? Not like in future what gonna happen, but with the wicks, with the candle formations, with how the market reacted during that moment, with that I'm showing you that it had a news over there. Okay, then I looked into the time and the calendar. This is the proof. If you don't get eager to learn this shit, I don't know what you are trying to do with your life. Okay, so good luck whatever you are trying to do. There is your liquidity. Since this is a swing high, a swing low, another swing high, market grabbed that liquidity, gave the market a structure shift with this candle. Okay, I don't consider any week as my market structure shift. Lot of other people can say you that shit. I don't consider that. Because why I don't consider that? If my week was a market structure shift, what happened? This candle gave me the structure shift. Okay, and can you see this and this? That's your order block. Okay, there is no fair value, but that's your order block. Whoever entered into the order block tried to put anywhere near these levels, like the 50% or the previous candles high that I was showing earlier during my order block example, all of them got fucked. Okay, this is not a stop, they got fucked. I'm sorry because I'm getting angry. I'm not, the reason behind that is I'm asking for people to let me know if they have any question. I'm asking for people to let me know how they find my video. No fucking response. Okay, yes, I'm getting subscriber, I don't need subscribers, I don't need views. You see, I'm still uploading. Some of my videos has 500 600 views, some of my videos has maybe 30-40 views. I don't care about that. I need one person to learn what I'm trying to teach here. That will bring me, like, that will give me my success. I don't need a huge community. Yes, I want to see friends around me, I want to see people successful, but I don't need subscribers. If that was what I was looking for, I would spend time on making thumbnails, I would spend time on editing a lot of other things. I do very little editing just to make the video shorter, not to hide anything that I'm saying here. Okay, and today, no matter how big the video is, I'm gonna upload it. Okay, anyway, I want to see a body closing below. That happened here with this candle. Market created two fair value gaps. Whoever calls this one as their breakaway gap, fuck you, because it didn't leave a single fucking portion unfilled over here. Okay, and then why I put my stop loss here? I put here because that's my fair value gap candle high. If it was here, I would put here. If it was something like this, I would put here. Okay, that would give me even better risk to reward, but I put there. Okay, now it's a huge wick. It's a huge wick right here. So what I can do you remember what I told about a huge wick if the stop loss is too far? Let's see if that could save my ass or not. That's my 50%. What I said about huge wick, little above the 50%. Did I put there? Yes. Now what happened here? I don't even need to go above there. Did price hit that? No. Now here is your order block. Let's see where is the 50% of that order block. What I told you about your stop losses. Okay, here is your 50% of the the order block. If you want to go there, just put little above that 50%. That's what I told you, right? Now this I put the stop loss until this level. Okay, without looking what happened there and without taking any other things over there in consideration. I just draw a Fibonacci from my swing high to the swing low. I saw the optimal trading zone. Yes, I have the fair value around that. Did I put this entry here? Did I put it when this happened with price? What I said, let's see what price do. Did I said that or not? I'm not gonna edit my video. Okay, no matter how long it is, if you want to watch, you can watch, otherwise fuck off. That's what I'm saying, and that will be my language from now on. If you want to like it, you can like it. If you don't, it's up to you. I don't care anymore. Okay, I need one person to learn from this, and that's my elder brother, and that's why I'm making this video. If he's learning, I'm happy to see that. Anyway, so that's my 50%. I can put it right above that 50%. Price would give me even more. Okay, targeting this, and what I initially targeted was this low with these swings. Okay, these relative equals, if I'm not wrong. If I'm not wrong, this is what I targeted initially. That gave me even like more than 2 or whatever. But where is my original relative equals? Here, and that's where price went. Okay, yeah, I can target this low, and that's the lowest level of that relative equal. Here price went even lower, and lower where, I don't know, but there are more relative equals sitting right there. Okay, this, like this level, I don't know if price went there or not. Maybe not. Even there are other areas as well, but okay, let's see like if price went until that far or not, or it reversed from here. Let me play it actually. So what price is doing here is permissible, because after a huge move like this, it needs to retrace. Okay, it needs to generate some liquidity before going down. So I want to see what happened. Okay, it's taking too long, so let me just go to 5 minutes. or even 15 minutes because it's a long way down there. Now let me play what happened. Let's see. Okay, before I go anywhere else, let's see what happened around this area. Here is your fair value. That price came. Also the order block. Okay, the wick is too big. I don't want to look for the order block like this. Do I have a breaker block around that level? No, but I have this order block slow with a huge, I mean, news time weeks. It messes up everything. That's why people don't like to enter into a trade during a news time. But anyway, so this is where price came. Yes, I can see some reclaimed order block, but I don't want to talk about it because I don't need a reclaimed order block. Okay, I don't need to learn about that. You see this sheet is your reclaimed order block. It's a bullish order block on its way up, and that's a reclaimed order block. That price reclaimed and went down. Anyway, I don't want to talk about this. ICT has the video. If anyone wants to know about that, you can go and check ICT's video, but I don't need those. Okay, so what happened here, as I'm saying, I just want to see around this level. Now if I go to 30 minutes, my fair value, I could find better fair value, and this reaction would make sense around that, but I don't need to see that. There is a fair value gap, price went above there, created liquidity and took liquidity. This one is what price leaving here. I don't know if price wants to grab it. Instead price gave, I think I don't want to consider this one because they are relatively equal, but anyway, that's my market structure that I can call. You can see the order block that price tapped, price gave me a second market structure shift. If I didn't take entry into this small little fair value with the order block, you see like there is a small fair value gap over here with the order block. Okay, and when there is a small fair value gap with order, I mean when there is a fair value gap with the order block, I try to mark the entire thing and then write it as my order block plus fair value, and that's what price is respecting, and that's why I have this template saved. Now I can enter on the order block if I want to, but since there are equal highs, I need some more confirmation. So let's see if price is coming back for this sort of fair value gaps or not, or if it wants to even go higher and grab the, I want to see price coming and, you know, going for this area, because that aligns with this. So let's see what happened, if price came to that area or not. Okay, so price left this fair value gap open, price respected this fair value. Come on. Okay, yeah, so price respected this fair value and then started going lower, and eventually I don't know if it grabbed the liquidity or not, but I still want to keep an eye on this. Okay, since it didn't go there, I still want to keep. Okay, now I don't want to look for any more entries anymore. Why? It took the liquidity, then it started going up high, so I don't want to look for a sell short anymore. Now why I didn't consider taking entry here? I could have considered, okay, I could have, but it was not looking good to me. It was not looking good because this is my swing high, this is my swing low, that's my 50% level, and price came near to that 50%. It didn't even touch the 50%. okay, I don't want to enter into a trade below this. Why? Let me talk about this. Okay, let me just give you guys more of a video. So this video you will be bored, or you will be too much, you will learn too much from this video. So this level represents, let's say, 1. Why I'm gonna come back to that. Forget about the 1 and 0 that you can see, the 50%, the middle point. Okay, why I'm saying this represents 1 is because, let's say you bought a pen for $1. Okay, you bought a pen for $1. This is where you are holding a pen. Now you want to sell a pen. Do you want to sell a pen when it's lower than your buying price, or you want to sell a pen when it's higher than your buying price? Think before you answer. Okay, and I want an answer in my comment box. I want some sort of answer in my comment box. If you don't answer, I don't need you. Now, sorry for being harsh, okay, but I had to be harsh, because I'm not, if I don't get any sort of questions, if I don't know that you are ready for my next video, you see, I don't have any consistency regarding the video uploads. I can upload every day. Okay, believe me. But just because I'm not getting the response, I'm not uploading, because I don't know if people are actually learning or not. Anyway, so I bought a pen with $1. This is where I'm sitting, the midpoint. Now I don't want to sell the pen when it's lower than my buying price. I want to sell the pen when it's higher than my buying price. When you are looking at a chart, you are looking at a dealing range like this. You want to sell when the price is above your initial level, or at least you want to sell break even, right? You want to sell on the 50%. You want to sell above 50% if there is any reason for price to go. I had reason over here, wherever I marked it, I cannot remember. Here I had reason for price to go here. Okay, I had a fair value gap. That's why I was looking into that. If there are no fair value gap, and this fair value gap was somewhat, let's say it was something like this. Let's say there is no fair value and it was something like this. Okay, let's say how big? This big. Now I have 50% here. I would easily look for an entry around this level, keeping my stop loss here. I won't look for entry here. This 50%, this is where I want to look for my entry. Why? Because that will give me a break even. If I bought a pen for $1 and sell it for $1, I didn't lose any money. Yes, I lost some time, I lost some effort, but I didn't lose any money. But if I sold when it's lower, I lost the effort, I lost the time, I lost my money as well. Anyway, the video is going too long. I hope you got the point why I didn't enter here and why I was looking there, because I had a reason over there. And also these sort of things I'm gonna edit it out, because I'm gonna make another video regarding risk management, trading psychology, a lot of other things. Okay, more videos coming, but just for the moment you just focus on the breaker block, you just focus on the order block. I hope I was able to give you the definition. I don't know, it's been very long time that I'm making this video, so I'm not quite sure about how far or how much I'm able to give you guys. Okay, and I'm telling you guys over and over again, if you are new to the channel, please consider subscribing, or don't subscribe, but if you are learning anything from the channel, at least let me know, so that I can make future videos depending on your feedback. Okay, that's all I need. I need a feedback that can help me create more videos in future. I hope you got my point. Until next time, take care, bye bye, and enjoy the rest of your day.